Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Hello there and welcome to the Better System Trader podcast. Glad you could join us today. Now in this podcast episode, we're going to be investigating two different worlds of trading. They are the institutional side and the private trading side. And helping us to do that is our special guest, Petra Zacek. Petra started out in the institutional world, and in this episode she shares some interesting stories and lessons about her time there, but also now that she's a private trader, she's also going to share some insights into trading her own account and the transition from moving from institutional to private trading. Now, some of the things you'll hear in our chat today are why it's important to think outside the box and how to express your trade idea in different ways. We also discuss making the switch from institutional to private trading and the impact that Petra's institutional experience has had on her trading today. We also talk about how the institutional world research ideas, including what private traders are up against and how we can compete. Plus, we talk about the benefits of collaboration, using algos as an additional filter on top of a setup, how to balance accuracy with win-loss ratio, plus a whole lot more. So let's jump over now to my chat with Petra. Hi Petra, welcome to the show. It's really great to have you here.
Thank you for having me.
Now, how about we get started with a little bit of background on yourself? So can you share your background in the markets, perhaps how you got started as well?
All right. So I walked onto the trading floor to be part of the emerging market desk on September 1st, 1998. The reason why I remember it so well is because it was exactly 2 weeks into the Russian government default. And at that time, obviously, they froze all the foreign accounts, including the account of the bank I actually walked in. So the emerging market desk was really, really impacted by that. So for the 6 months of my traineeship on the trading floor, I actually was helping to try to recover the bank's money. And because I speak very well Russian, it's actually my third native language. At that time, my family was living in Russia. So I was using all my relationships I had to actually try to minimize the negative impact on the bank at that time. And it was quite stressful actually for everyone because it was a huge blow to the bank. Yeah. So like 5 months later, when I returned for my summer internship, everyone already knew me in the bank because we went through all that impact. And I came back. They asked me to come back for summer internship before I graduated from university. And they asked me actually to build up the Central and Eastern European institutional clientele for the capital markets, for the trading floor. So at that time, except Russian clients, which obviously because of the default was completely off limits. It was like profanity, literally, when you mentioned the name on the trading floor. Then there were no really clients existent in that region. So, there was not much on the internet at that time. It was just, starting. So I was like, okay, how am I going to do that? So I went to the back office in the bank, which is the department which handles basically the money of the bank. They, handle all the transfers. So they have huge books, which are called Banker's Almanac. Or at that time they did. So there was like 20 plus volumes of those books. And these books are literally a database of all the banks in the world. So when you open it, you find the bank in each of the countries, whichever you want to have, from US starting to go to, Mauritius or, South Africa. It doesn't really matter. Any country in the world, as long as there is an official central bank and some sort of a regulated bank, they will have their contact numbers, their SWIFT and everything in there, even names of the executives. So I started making phone calls based on data in these books and asking people to start trading with us. So looking back, I just still couldn't believe or can't believe that the people even talked to me at that time, because I was clueless about anything at that time. I didn't know really much about the market, about what we are trading, how to do that, anything. But this was a lot of fun at that time.
Yeah. You must have seen quite a few interesting things happen, especially around risk management in your times in institutional, which I think we're going to touch on in a couple of minutes. But first, how about if we fast forward to today now? What does your trading look like? What markets, timeframes, trading styles do you use personally?
Okay, very good question, actually. Well, because I was working on the trading floor for a very long time and I was handling a lot of institutional clients with a lot of inside information, because of the compliance rules, I had actually our family trust managed by third party until I ended my work on the trading floor. From 2014, I was then retired, so I was able to start trading the family trust. So that is quite substantial, and because of that, we have different portfolios. We have, we have a portfolio which has financial products like stocks, futures, but we also have a portfolio which consists of real estate and collectibles. So going back to futures, part of that is futures portfolio, and I tend to trade it with approximately 80-20 relationship, where 20% is algorithmic, and 80% roughly would be discretionary. Within that portfolio, I might do actually options or spreads, not just outright futures, depending how I think I can express, my view. Because if there is a better way to express my view, I will probably go not just for outright future, going long or short, but I would step into options or spreads, depending what the situation is. Options tend to be a bit more forgiving on the timing and on the stops, because you don't really, if you do a spread or something, you don't, what you got is what you get. But you have to really day-to-day manage it. What a lot of people don't really realize, you can actually end up making a substantial amount of money if you manage it properly. Whereby when you have outright position, it's just about your stop and, trailing it or profit target, but you don't have to do day-to-day management that much if you do longer term trades.
Yeah. So you said there that you do an 80-20 mix of 20% algorithmic and 80% discretionary. So how do you use the algorithmic approach to, or how do you apply that to your trading? Are you using that like as perhaps a filter or a confirmation, or how do you?
Yeah, I do use algos a little bit differently. I have 20%, it's kind of like algorithmic and it runs by itself. But I use actually mechanical systems to help me as an additional filter on top of my trade selection, perhaps to give me a additional edge when I do the entry. When I decide that if I see a commodity being set up, I actually go, and when I see that event evolving in the market, I actually go and try to express it inside a system and run it for the backtesting to actually show me that I get the confirmation that I am correct in terms of if the market was showing this type of signals, or this type of was evolving in this type of way, that in history it actually meant that it really went either up or down, or it had the effect what I'm thinking is going to have. Most of the people, typically they use algo in a little bit different way. They basically say, okay, I'm not having at the moment in my portfolio a mechanical system, for example, on heating oil. So I'm going to be sitting down today and I'm going to be, developing a system on heating oil. So they sit down and try to, optimize and code a certain approach where they can have a system in place by the end of the day or by the end of the week. And this is not really what I'm doing, because I rather want to have it as an additional filter on top of my setup to give me the additional comfort in terms of what happened before. Not just I'm imagining it on the chart, but yes, it actually happened, and this is what happened afterwards.
Yeah, okay. So did you come up with that type of approach based on your work in the institutional world, or is this how did you actually come up with trading in that kind of manner?
Well, I guess, yeah, difficult to say actually, but it was mainly because I'm not as visual as, like, I was studying Larry Williams, courses in the past, and this is what got me actually comfortable with the markets, with futures markets, and I really liked it. But Larry, he has this gift that he has been in the market for 50 years, and he just sees it, even though he does algorithmic on the side. I think it's a very small part of his trading actually, because he just looks at the chart and he can see it. I don't know, a lot of girls are probably like that. I don't have that type of visual impact as such. I can see it, but I'm not feeling 100% comfortable to just taking the trade by itself. So I needed additional, confirmation or additional layer of comfort that what I'm seeing is actually correct, if I would say so. So it kind of evolved from what I was doing on studying Larry and knowing a little bit more about the algo.
Yeah. So something that you mentioned to me in one of our previous conversations about the way you trade is you're looking for higher win rate and higher win loss potential trades. So typically, if you're looking at a higher win rate strategy, you might be something like a mean reversion, where the win loss ratio is quite low. Or if you want a high win-loss, then you might be looking at a trend following, where the win rate is quite low, but you're letting the trades run. So if you're trying to get the best of both worlds, how do you actually balance that? How do you balance the two there?
I think I'm trying to think about trades a little bit differently in a way how I take those trades. Because a lot of people backtest it and then they just go for it in terms of what they see. I actually, when I see the results, then I'm thinking about how can I make the trade even more profitable, or how can I limit my risk even more than I can see right now on the backtest. Meaning, can I express it in a different way? Can I do a spread? Can I do an option? Can I just, circle back completely and think about the trade in a completely different way? Because when I was in investment banking, that what you learn is literally thinking outside the box all the time, because you have to find ways doing the impossible things. Like, giving you an example, I remember like today when I was standing in front of a credit committee, and I was defending one of my clients' project finance project, where we would be financing as a bank a 3.5 billion, 15 years project of an oil company for a Russian mining project. And standing at the committee, I was very much aware that if I will succeed to get the bank's approval to finance this project, which in itself would be like major, major achievement, and it took 6 months work preparation to actually even approach the committee and get it approved, I had to figure out, if I get it approved, I had to figure out a way to hedge the financing for the company. And that at that point, you need to understand, I was facing the challenge to create a 15 years ruble-dollar cross-currency swap hedge in a market where you would have forwards for up to 2 years maturity only. And typically, you would have like 50 million max per trade liquidity. So you just know from the start, you just can't dump 3.5 billion in the market, because this just doesn't work like that. You have to be creative. You have to figure out a way how the market can absorb this volume and the maturity. And therefore, you have to approach the trade in a different way. You just can't call your broker and say, oh, okay, I have 3.5 billion to do. I mean, how fast can we do it? It's just, no one would talk to you. Yeah. It's not happening.
Are you crazy?
So because, yes, exactly. And looking back, we were very much aware that this is like mission impossible, but we did it because we went out and we were really creative, and we were, able to create a hedge and execute it without even market, getting moved or anything. So this is what you have to do in institutional world every single day. So you approach the trades differently.
Yeah. Yeah, I think that's a really good lesson there in, the way that institutional thinking it comes up with these ideas. And I think we can all kind of, I probably won't ever have to hedge a couple of $1 billion myself, and a lot of private traders don't have that kind of cash. But just the principle here around thinking about things a little bit differently and having an idea and trying to figure out ways that you can express that is really powerful, I think, even for private and retail traders.
Yes, absolutely.
Yeah. So now I want to kind of extend that a little bit further into risk management. Now you've already mentioned that you had some experiences with the Russian default and quite a few other experiences over your institutional career. How do institutions think about risk management perhaps differently to the way private and retail traders would?
Well, it's a very different approach, obviously, because there's a lot of steps you have to do before you even execute the trade. So a lot of people in private world, for them, it's literally pushing the button, buy and sell. That's it. They don't even think about, the money I have with my broker. Is he going to actually be here tomorrow? If you were, starting up your trading relationship in 2005, let's say in April, by the end of 2005, you wouldn't have any money if you were with Refco, because you would have lost everything. So, a lot of these things, those steps, a lot of people totally underestimate, like trading setup, what platform you're supposed to use, or how can you make sure that you don't have too much money with one of the brokers because they might actually not be here tomorrow. And we have seen it happening all over again. So in the institutional world, you actually have certain road you have to follow to actually satisfy the bank about the risk, what they are going to take. Very often they end up taking almost no risk because they make so many steps before that they make sure that the risk is very limited. So I think a lot of people who trade their own money, they actually don't even think about it. They totally underestimate that.
Yeah. Yeah. And what about the quant side then? I mean, we see in the news hedge funds some hedge funds making lots of money, making money every day. They've got all these resources that they can use. So, what are retail traders up against in the institutional world?
Yes, that's a very good question. A lot of people actually don't realize that when a trader has an idea or even the research department, doesn't really matter who it is in a bank or in the hedge fund. They actually sit down and say, okay, we have this idea and we think this is going to work this way and it should make this and this amount of money. And then, someone in the management says, okay, guys, I actually like it. It's compliant with whatever we are trying to express here. It's not, anything we would not like to do. So let's throw some money on it. So they also allocate quant team. So, they have 4, maybe 6 people doing nothing else, from, in the morning till the night and flogging this thing to death, basically from every single angle. Then you have lawyers, you have risk managers, market risk. All these people basically come together and they work on it and they dissect it, literally every single inch of that idea, and find out if they can make money or not. And then, comparison, you as a one lonely trader are sitting at home, staring at the screens, at the charts, and try to express this idea in competition to this huge institutional house, which, has almost unlimited resources and, will simply make the trade happen if they want to. So taking it back to my trade, what I did in the project finance, I had literally 4 quants working on that trade. Then I have 2 risk managers and 2 lawyers, and obviously the Russian market traders working with me for 8 months to make it happen. So, do not underestimate that. This is a very big thing.
Yeah. So just listening to the way you explained all that, it almost felt like, oh, what's the point? But, retail traders and private traders can't compete with the resources that the institutional banks, the institutions have. But is there any way that retail traders can actually compete? Or?
Oh, absolutely. I think so. I mean, institutionals are very large houses, so they don't get bothered by small volumes or trades, which could be very short-lived, which are not really exploitable by them. So anything what is not obvious or, liquidity is always important, even if you are a lonely trader, because, people who think they are going to trade 50 contracts in lumber tomorrow. I mean, okay, go on and try it. It's not really happening. But as long as you do your homework in terms of what you can do, if you find ways where the institutionals are not really getting involved as much, or you have the time to actually see it happening, you can act quite quickly compared to them having to go through that process of approvals, and all that stuff. Because quite often, if they are not set up for that, if it's a new thing or special thing, they have to get it set up. So they are not as quick as you could be as a retail trader. And it should be a trade which is not staring at you in your face. Like, if you are starting to do spreads, I would not recommend doing spreads like in US treasuries, because the whole banks, 80% of the banks are hedging actually with US treasury spreads, all the exposure. So if you think you can outmaster them, well, good luck to you, but if you want to do something else, which is not as obvious, there is definitely a lot of things that can be done.
Yeah. I think it's interesting just to kind of keep that in mind, and that saying, pick your battles. So
yes,
yeah, definitely keep that in mind when you're looking at the types of markets and trading styles and positions you're taking and things. I think that's a good idea. Now, I just want to ask you about this transition from institutional world back to normal life. I know I do have institutions listen to the show and prop trading firms and things like that. And you made the transition from institutional. Now you're a private trader. What are some of the challenges that you had to face and overcome? Making that transition.
Very good question. I was struggling with it a lot, I have to admit, because when you are used to being on the floor with 300 other people and working in teamwork, having a lot of things done by you automatically because it kind of has a structure, it's a big difference because you have to do everything by yourself. On the other hand, you don't have to do a lot of stuff, where this is a limitation when you work in a bank. But it's quite a lonely job, I have to say, when you turn into trading your own money. So, I was struggling with it myself because I would be involved in a lot of projects before. So I try actually to cooperate with a lot of people. Well, a lot of people. I'm very, very selective because you have to somehow fit together. You just cannot be completely like different sides of what you are doing. But I cooperate with a lot of people to actually compensate for the fact that you are by yourself.
Yeah. And what about then, making the switch from taking billion-dollar positions into, I imagine your private trades probably aren't that big, but how do you, I'm just trying to think of like the emotional side of things and, those kind of things must be quite different.
Yeah, I'm very lucky because of my history that for some reason trading as such does not make me go crazy in terms of like I wouldn't sleep or that I would not be able, to push the button or that I would feel anxiety in terms of trading. I'm very fortunate. On the other hand, this is also, every coin has two sides. So I had to, in my private life, I had to develop a certain procedures or certain structure for me to tell me that I have actually too much risk on or that I am overexposed because due to the fact that I don't get really nervous about exposure or about risk or my trade going against me or something, I literally could actually harm myself because I would not like the typical what people have that, if you are not sleeping well, maybe you shouldn't have that exposure on. So it doesn't really happen to me. So because of what I've done for my whole life, I'm very lucky not to have that. On the other hand, I had to come up with certain procedures to actually make sure that I don't have too much exposure.
Yeah. No, that's a good thing to consider. Now, I just want to switch topics a little bit to the World Cup Championship. Now, I saw your name in the leaderboard there. I haven't looked lately, so I'm not sure how you're doing, but I know you're in there and you're doing quite well. So, first of all, why did you decide to enter the trading championship?
So so being very honest, like if you would have talked to me probably a year and a half ago, I would not have ever imagined to actually doing championship. It wasn't really my motivation why I'm trading or why I'm doing that. But in 2017, I actually went to the trading masterclass in New York, which was organized by 4 multiple world champions, Michael Cook, Andrea Unger, Kevin Davey, and Tim Ria. And that really changed my life in terms of trading because first of all, it made me realize that these 4 guys actually are human. They are not some Superman or, aliens descending from different planets. So that was an amazing experience for me because I actually felt that they are normal people. And there actually I got to know, Michael Cook, who has very, very similar institutional background to me. He's also a former emerging market big bank trader. So, and I asked him actually to work with me. I wanted to, to cooperate with him or collaborate. And he agreed with one condition. And the one condition was that I have to enter into the championship next year. So at that point, I was like, okay, let's see. So I actually entered in the fourth quarter 2017 championship as well. There's one which is shorter, or there's sometimes two. And they did the fourth quarter 2017 because I actually thought, why don't I do like a test run and see how it makes me feel? In terms of, is it going to change how I'm going to sleep? Is it going to change how I'm going to trade? Is it going to do anything to my emotions? Is it going to change how I think about the portfolio, what I have on? And it was a lot of fun because I really enjoyed it. And I was in top 5 most of the time. So I was really, it was nice, actually. It was reassuring. And it was also fun because a lot of my friends, a lot of people I know, they would literally ask me nonstop, like, okay, what place are you today? What have you done? How does it work? And this type of thing. So I actually but I actually wrote, like updates on my Facebook and on Twitter, on my profile, for the people I care about in terms of where I am and what happened. It had like 2 days delay, obviously, because the rankings, they come out with 1 daily delay normally. So it had a little bit of delay, but, it was really fun to do that. And, it was cool. I really liked it. So in 2018, I then entered and, so far so good. I'm enjoying it and now I'm making new friends because of that as well, because a lot of people who are actually in the rankings I know now, and this is good because maybe we are going to collaborate together as well.
Yeah. There seems to be a little bit of a chain or a pay it forward thing here happening with the World Cup Championships. So I think Michael Cook was inspired to go in the championships by Larry Williams, and now Michael's inspiring you to go into it. And I think maybe Andrea Runga as well is a student of Larry's. So it's kind of like, it's spreading out. Everyone's paying it forward every year. So now you've got to think who you're going to encourage to get in there next year.
Yes, absolutely. Yes.
So you mentioned collaboration in your last comment there. Why do you think collaboration is important? What benefits do you actually get from that?
Well, it's very important to find someone who you can collaborate with. So someone you can trust and someone where you can find a common ground, what you want to work on. And I always say if there are 2 people working on one thing, it's just twice as much the probability, probably even statistically even bigger probability that you will come up with something. And I have seen it happening all over again. So this is why I'm really keen on doing it, because every person looks at certain things differently. They have a different idea. So you can work together. And it's not about, tell me what trade you are doing. I would collaborate with people and I would never ever have a discussion like, what kind of trade ahead do you have on? Or what do you feel about this market or that market? It would even never come up because we would work on the concept as such. And then we would potentially, based on this concept, which we, progressed in and we somehow concluded it's either workable or not workable. So if it was successful, we would actually end up taking trades in different markets. So it's not necessarily about revealing some secrets or sharing secrets with each other. It's about the experience. And I have to say, I am actually thankful to Michael Cook really, really a lot because of the collaboration, I was actually able to sort out my setup as a who I have as a broker, who I have as a platform, what I'm using as a platform. And for one, I can actually go to bed and not think about, is my platform gonna stop talking to my broker? And therefore my positions are gonna go totally out of whack. My stop losses are gonna be hanging in the platform and not being passed on to the broker. And these type of things. And if I didn't collaborate with him, I would not have been able probably to find it out as quickly. Eventually maybe I would sort it out by myself, but how many turns would I have to go, and trying to find out how much money would it cost me, how many sleepless nights where I would have to get up, because something happened. So this way you are really on a way to be faster.
Yeah, I think collaboration's a tricky one because there are obviously some benefits you can get from sharing ideas and discussing things with other traders. But the trick is trying to find the right person. Some people are really closed and they don't want to share ideas and everyone's a competitor. And then other people are quite open and they're happy to talk. So do you have any tips on trying to find the right type of person to collaborate with? It almost sounds like you fell into this collaboration with a stroke of good luck. But how can other people kind of look at collaborating with others?
Yes, I do tend to go by my gut, because I tend to find people who I can actually work with, that we have a common ground somehow. When I went to Larry Williams seminars, when I did do his courses, there I got to know 3 other people, where one was German, one was American, one was New Zealander, and we created like a club where we would have calls every Sunday speaking about actually what we learned from Larry and how we are applying it, or how are we gonna, use this type of indicator, or we were creating a different indicator which was based on something what we have learned in that course. And we literally in that course where we met each other, all of us, we created this group, and we were like, for almost 2 years, we would have every single week, we would have a call. But we never spoke about like, are you long or short, until we actually executed the trade. When we were having that trade and it went awfully against us or awfully in our favor, then we would share it, but we were working together on the concept. So I wouldn't say it was luck, because if I went to the course and didn't want to get to know anyone and didn't want to work with anyone, I could have gone home and just work by myself. But I actually was going there to actually get to know the people and share the same, base that we can then enhance together. So I think it's about seeking it. It's not about just sitting there and, hoping that it's going to bump into you.
Yeah, that's a really smart way to look at it. Yeah. Okay, thanks, Petra. Now I'd like to just start wrapping up now with some quick closing questions for you. The first one, What's the biggest lesson you've learned through trading?
Probably in my case, patience and humbleness, because I have been humbled a lot since I started trading myself, and probably expected totally unexpected. Like, future results will never ever look like the historical one, whatever you think about them. Doesn't matter how you backtested them or simulated them, they will never look the same. So expect the unexpected.
Yeah, that's a good one. And what about the best trading advice you've ever received?
Probably the fact that if you have a losing trade, it does not necessarily mean that you were wrong. It might be caused by something completely different. So I think this is because people are beating themselves up when they have losing trade. They actually think about incorrectly about the trade. They think I was wrong. Not necessarily.
Yeah. Okay. And do you have any favorite trading books?
Yeah, like everyone, the Market Wizards, they are simply timeless books. But I have to admit, I do prefer to actually listen to podcasts lately, like yours. I love it.
Thank you.
Because I find that the advantage of that is, I remember Larry once when we were talking, he said, in 2008 or in 2007, actually, I wanted to come out with a book which was called like The Next Crash or something. Yeah. And his editor told him, I will not publish this book. I will just not publish it because the name is simply unacceptable. We are in a bull market. No one will buy the book. When you go to a podcast, you can say almost anything.
Yeah.
I mean, and it's actually not 25 years old. It's now, today, and it's with regards to what's happening. So I think a lot of the ideas or a lot of the tips I get from podcasts like, yours or, Kirk Duplessis, for example, Optional Alpha. I like that very much, or, TED Talks, it doesn't really matter. But I tend to listen to those a lot because they are really on time. They are right now.
Yeah, we're really spoiled for choice these days, aren't we, with all the YouTube and podcasting and ebooks and all kinds of stuff. So
yeah, it's a little bit overwhelming. Yeah,
yeah, it is a little bit. Yeah. Okay, and now what's the best way for listeners to learn more from you or to follow you?
Okay, so I have been fortunate enough that I'm part of the advisor club on the World Cup, so everyone can follow me and other advisors like Stefano Serafini or the current leader Jan Smolin of the championship on worldcupadvisors.com. And actually it's singular, worldcupadvisor.com. Sorry about that. So everyone can follow me there, or obviously on the championship results as well. And people can get in touch via LinkedIn, or they can email me. Yeah.
Okay, cool. All right. Well, I'll have a link to the World Cup page on the website so that people can get to it if they're driving the car or something right now and it's not convenient for them. So I'll put a link for that up on the show notes page. Now, I think, is there anything else that you'd like to mention before we wrap up today?
Well, thank you for having me. That's the first thing. Second, I think people should not give up.
Yeah.
Because I have to admit, if it wasn't for all my collaborations with the other people, probably I would not be trading today, because sometimes it's really frustrating when you cannot solve certain things. So just don't give up. Go back, just circle back and look at it again. It's gonna work. You just need to work on it.
Yeah, that's great advice. Well, thanks for spending time with us today, Petra. It was really enjoyable to chat to you and hear some of your stories from the institutional world. Very eye-opening. And I wish you all the best for the rest of the year for the World Cup Championship. I'll be following along, and hopefully you do really well. So
thank you.
Thanks again, and I wish you all the best.
Thank you.
Okay, well, that's it for this episode. Thanks for listening. I hope you enjoyed the show. Come on over to bettersystemtrader.com. That's where you'll find all the previous episodes, all the transcribes, all the show notes, and all the free weekly trading tips. bettersystemtrader.com.